Hello, ladies and gentlemen. Davis Martin here. It is January 21st. The stock market's closed, but that's fine. Stock market being closed is a great time to teach, and I'm going to cover the head and shoulders, okay? Now, this is a chart pattern which is very easy to spot after a little bit of time or just simply lengthy, detailed educational videos on my website. So, this is a strategy applicable to taking advantage of red moves in markets. Now, we're going to cover a recent trade of the day, all right, in which the trade plan was to take advantage of what wound up being a red day in markets, in which case a head and shoulders is a great chart pattern to be able to take advantage of that. All right. And I'm going to teach it to you. This is a strategy in which you want to buy to open put options. All right. And then you follow it by sell to close. Essentially, you're shorting without actually shorting. All right. How many put options do you want to buy? Well, that's up to you and the size of your account. Okay. But it's applicable in red markets. It works. I know it works. It's a tactic applicable to my trades of the day when I'm going to the downside, which I did a heck of a lot toward the end of 2018, for example, when we saw red markets. But let's cover one here. All right. Now, this on January 16th, nice run up. All right. But it didn't last long, and believe it or not, there wasn't a lot of percentage move in that run up. All right, so for buying to open call options, which can sometimes move slower than buying to open put options, a lot of people like red markets better because there's more price action to be taken advantage of. But but you notice how that comes to an end, reflected in the volume on the downside of that chart. Look at that green buying volume slowly but surely coming to an end. All right. Then consolidation, a fancy term for sideways. So you get this candle. This is a 5-minute chart, by the way. Then you notice how this 5-minute candle opens lower than the previous 5-minute candle and is followed, that which is good, nice neckline to buy to open put options. Don't worry about the term neckline. You can learn that later. And do you notice this increasing red selling volume? All right. Great. Great. Bear sign, buy to open put options. You want to capture this red move, all right? And you see this red volume coming through, okay? Now, when do you get out of the trade, right? You can getting in a trade is super easy. All you can essentially throw a dart. If you're piggybacking someone and then by the time you get the alert, the trade's already up 10%, you don't want that. SPY options, my trades of the day, are highly liquid. All right. Sometimes members get better entry prices than I do. Great. All right. Make more money than me. I'm happy for you if you do. But but when do you get out? Well, here's a long tail. All right. That's not a great thing when you're in put options. Take your money and run. All said and done, this move lasted from 10:10 to 10:40. That's 30 minutes worth of work. And inside this head and shoulders, that's a pretty easy trading day. And by the way, when I say work, I mean simplicity. Nice and easy. One chart pattern created for that move. All right. Now, this is only one of 3 key tactics I apply each and every day into my trades of the day. First of all, planning them and delivering them to you 30 minutes before the market opens. And second of all, taking advantage of them. All right. Taking advantage of the price action. One of 3 key tactics. It really is that simple. There's the head and shoulders, the exponential moving average line crossover, and the inverse head and shoulders. Okay. Now, this is one of 3. I hope it helps you going forward in red markets. but you need to learn all three in detail. Click the link below. We'll cover it in detail in my free webinar. I'll see you shortly. I'm excited to teach you about the other two key tactics which can help you profit on a daily basis. Talk to you soon.